with CDRs as an alternative, Chinese web portal Sina last week still said it is planning a secondary listing in Hong Kong. What are the reasons behind companies' decisions about choosing markets in which to list? Earlier, I spoke with Theodore Shou, Chief Investment Officer at Skybound Capital. As we know, mainland bourses and the Hong Kong exchange are all competing to attract these tech companies. Sure. So how do you think these tech companies decide where to list?
I think when it comes to a selection of your listing destination, several factors definitely matter, and some of those are not necessarily unique to tech companies. For example, proximity to the user base, because in a way, a lot of listed companies see the listing itself as a marketing opportunity too. And also valuation of that particular sector, whether that sector is valued or attracted to that market or investors in that market. For the tech companies, I think there is at least a third factor that also matters to them, which is clustering effect. A lot of the tech companies actually want to go to a market where they see a lot of peers that are also listed there. There's potential business synergy, M&A opportunities, as well as just peer pressure or peer comparison.
Now we know a new instrument that will be inaugurated here is the China Depository Receipts, the CDR, but we know also the threshold for those are very high, so only a handful of companies are qualified. So what kind of impact do you think they will have on the mainland markets?
I think a lot of the market participants nowadays are talking about the impact on liquidity, because a lot of investors are worrying that an influx of CDRs or new issuance from these large Chinese companies might drain the liquidity in the existing market, say the Chinese Asia markets. From that perspective, I think it's probably less a concern, because so far this year we have been seeing a slower pace of new listings in mainland China. Therefore, back to your point, yes, the threshold is pretty high for the CDRs. We don't really expect to see too many CDRs to come back to list in the mainland exchanges very soon.
Right now, there's so much excitement about these so-called unicorn companies, as we see in the share price rocketing of Wuxi AppTech. But also looking back, we also saw tech companies like Giant Network, BGI, and Focus Media. They have now lost quite a big chunk of their value from their highest point. So how long do you think this kind of enthusiasm will last?
Bear in mind, a good company is not necessarily a good stock, or a large company is not necessarily a good company even. And what we are seeing here is most of the names that you mentioned are probably still very good companies. However, when they first listed, the valuation was too hefty. And there is always this consolidation process when the market gradually take a closer look at the business and value them in an appropriate way.
Becomes more sensible.
Exactly. And I believe that would be applicable to any upcoming new listings that we are foreseeing as well.
Mr. Shou, thank you for your insights.
Thank you very much.